Hi, everyone. I'm Jen. Welcome back to Blockchain Banter Trading Crypto. I'm here with Dr. Mark Richardson, project lead at Bancor and Carbon DeFi, along with Keith Allen, co-founder of Material Indicators, TA and algo trader, order book analyst. Thank you, guys. It seems like we might be back to our every Tuesday thing, so this might be nice if we've got our weekly call back.
Yeah.
I kind of just want to start off, you guys are watching the charts a whole lot more than I am, not necessarily even just strictly the charts, right? Charts, the order book, the liquidity, things of this sort, right? Anything interesting you might have noticed over the last week, or even news, if it's any interesting news that caught your attention over the last week that you want to speak about.
Well, news is always fluid.
So true.
The sky is falling.
I think everybody across the world can relate to this.
Turns
right
out
now.
Biden's not going to run for re-election. Turns out the Middle East is going to implode on itself, and Putin's never going to quit, and Zelensky's headed to his back door. But other than that, things are great. Yeah, it's been an interesting week or so. We've had some mixed indicators, mixed signals from indicators. I would say I've seen some that say that we're at or near a local bottom, and we have some bearish indicators, certainly in death crosses. And we've had 3 of those in the last 8 days, which isn't, death cross is a lagging indicator. And for anybody who doesn't know, it's when a short-term moving average crosses below a longer-term moving average. And that, that's lagging because it got there because of the downward, trajectory that the price has been on. And sometimes price will continue downward on that trajectory. Sometimes it will level off.
Is it normal though, Keith, to see 3 in 8 days?
Well, I mean, that's an indication that prices moved quickly, right? So when we see things breaking down, then we do see them cross sequentially. Sometimes it's a quick recovery. Sometimes it's a short-term spike down and then a longer recovery period. It's not the be all end all to what's happening, and it doesn't necessarily mean that it's all doom and gloom. But we have a history with this particular death cross between the 21-day and the 200-day. It's really only happened 9 times in Bitcoin's history. And I posted something earlier in the week that says there's been no time in history where a death cross between the 21 and the 200-day moving average have been, and I'm talking simple moving averages here, by the way. There's been no time in history where this has been positive for price action, for Bitcoin price action. And of course, out comes the trolls on X, and the first guy says, well, what about August 2012? Bitcoin wasn't 200 days old at that point. So there was no 200-day at that point. But there were some that followed, obviously. And if you want to take a look at just a quick run through history on what these look like, I can pull up a chart. I've marked some. I've marked them all actually, because that's how I roll. Let's see what.
And you said it's specifically the last one that concerned you,
right? So the last one concerned me because of what the previous 8 did. So let's look at those and kind of try and frame this in the context of everything else that's going on in the market and what could potentially happen here. If we can gather, if we can conclude anything from what we've seen in history. Let's see what it looks like. So obviously what I just alluded to was what we've had just now. And this is the green is the 21-day, the purple is the 200-day, and you can see this death cross. I'll put the other ones back in here for a moment to show you the other 2 that we had here recently, right? We had a 30% correction in 8 days, right? That's why these have taken such a hard turn. Uh, the shorter term ones have, anyways, right? The 21 day and the 50 day, you can see, you know, especially the 21 took a pretty hard turn south after this big dump. And there's been a nice recovery. How often do you see a 12% green candle in the shadow of death crosses? Sometimes we get these spikes, and that's kind of like a knee jerk reaction sometimes, right? And
It's actually fairly common for the candlestick to rally into the death cross and bounce off of it.
yeah, that
I've
that
seen.
that does happen. That does happen sometimes, for sure. And so I'm gonna take these other ones out just so it's easier to see. Um, the ones that I want to focus on here, which is the 21 and the 200, and you can see we narrowly averted it a few weeks ago, right? I mean, like, this was within a day of happening. And so if we go all the way back to the beginning of time, the beginning of Bitcoin's time, anyways, we can see that each time there has been at least some sort of pullback related. The amount of time it takes to recover from that and what happens after that is where things get interesting to me, right? So the first time it was a 30% correction from, here's where the cross occurred. Price was up, actually slightly higher, okay, 32%. And it took quite some time to reclaim that level, right? So that was in March, end of March, beginning of April. That's an April Fool's dump right there. And it took until roughly a month to correct from that, to reclaim that. And so again, we saw a breakdown um, briefly. Actually, this was the return, and then another breakdown. This was obviously coming off the end of a big run here for Bitcoin back in 2013. That was the top of that market. So this was all bear market territory, and this was just really a bear market rally at this point. Same situation when things broke down in August of 2014, and that was a deep correction, 70%, and it took even longer to recover from this. And you can see there was a brief recovery, lost it again, and on this second dip here is where the consolidation happened. Yes, it was another 13% correction, but this is where bottoms are forming, right? You see this consolidation here, and then it was, the trip out, back to bull market territory. Again, we see these things happen over history. This was the 2017 top at 20K. This was the confirmation, for me anyways, that the bull market was here. And obviously this one took quite some time to recover. Again, this was March of 2018. We didn't actually see a recovery. We reclaimed the moving average, but in terms of price getting back to that level, it took a long time. It took over a year, right? This is June 2019 until price got back to that level. So from March 18, June 2019, over a year to get back to that level. Then we of course had the 2019 top, and so similarly, when we see this breakdown, this is what concerns me about this, right? Sometimes it does lead to, the broader bear market situation. Now, we did have a bit of an anomaly here with the COVID crash, right? I think everybody recognizes that this was really kind of a black swan type event. Nonetheless, it looked like price was poised to recover, and this is when all of the news started breaking about COVID. And so the recovery from this was beautiful, right? Big, hard V-shaped recovery. But this is what marked the bottom here. That was a 44% correction from, not from the high, but from where the death cross occurred. And you can see one giant candle. In this situation, we're not seeing, we saw the bigger candle And I'll get to that one in a second, I guess, because I'm looking back here in terms of where we see things breaking down again. This one was more of a consolidation event, and this is really what I'm hoping to see form out of this when it's all said and done. Similarly to this was in a consolidation range, and we saw price work its way out into a better run. This took us to the 2021 top here, and it was largely believed that this was actually, a lot of technicians consider this to be the 2021 top, and that this breakdown was the indication that the bear market was here, and that this was a distribution rally that maybe had the benefit of some manipulation that pushed us to a new all-time high. But I've spoken to many technicians who consider this to be the top, the real top, the legit top of the 2021 market. And so now, this is why it concerns me to see this move, because this was, again, confirmation the bear was in control, and we saw how deep we corrected at this point. Again, this kind of looked to me like the market might be recovering from this dip, but then we got all the noise about FTX and all that speculation with all of the counterparty risk among the various players in the industry, and this was the FTX crash down here. Then we start to see a recovery, of course, right? This led to another consolidation zone breaking down. Here's the death cross between the 21 and the 200. This kind of gave us one more dip in this consolidation range. And again, I'm hopeful that the scenario that we're in right now is more akin to this, where we're seeing consolidation, than it is akin to this. Because
I was going to say that doesn't look as scary as the others.
Right. Well, this, the problem with this is that, the fact that it's a consolidation is good, but the problem with this particular event is that this was really signaling the end of the bull run, and that this was just a distribution rally that gave everybody one last glimmer of hope. And it takes time for these things to develop, right? So that's
right.
that's how so many people go all in right here, right? Because they said, "Oh, we're just going to go do this again," and obviously we topped out at that point. So now moving into where we sit now, we had this, we had a nice correction here, 30%. I wanted a little more. Mark wanted a little more. We still might get it, but there's a chance that this is it, right? I seriously doubt it, but who knows, right? History doesn't have to repeat itself, but it sure likes to rhyme. And so
Wait, Pete,
yeah.
You're saying that 30% could potentially be all that we see in terms of a dip, or,
it could be this could still be, even if we get more correction from here, right? Even if we get a pullback, a continuation of this momentum from these death crosses.
Right.
That doesn't mean that this can't be the bottom. It could be, right? It could just mean that we're going to retest this.
Got you.
And if we get a retest from there, if we do get to test that and it holds, then fantastic. That would help validate this as a bottom. Likewise, if we go further and we test this 48K level, or better yet, we test this trend line. This is the one that I want to see, down here at that 45K level. That to me is a fantastic place to launch the next leg up from. So nothing is off the table at this point, but I guess the silver lining on this cloud of what many people, even the name is scary, right? But this could mean that we could go deeper. And if we go past this 45K level, I don't know how much lower I'm willing to go without saying that it's done, that the bull run is done, and we're going to have to wait for for a much deeper correction before we get to that next leg up. But
Which is what
I'm
you were saying some are already saying, right?
sure. I mean,
Was
listen,
that previous high
the
everybody's
internet
saying?
is full of bears and full of bulls and maxis on both sides.
Yeah.
Right. So yes, it could be done, but to me, the outlook, the fundamental outlook for Bitcoin is as strong as it's ever been. Um, for me, the post-halving narrative is still intact. This all falls well within everything that we discussed when we were talking about the halving. We talked about 20, 30, 40, even 50% corrections happening post-halving. It happens in bull markets all the time. It has in the history of Bitcoin for sure. And for me, the 4-year cycle narrative is still intact. Now, I don't know whether this time is different, and maybe maybe that 4-year cycle, maybe that post-halving narrative degrades. I don't know. The ETF era kind of changes things, but on that note, we still have ETF buying happening. Yesterday was positive for both Bitcoin ETF inflows and ETH ETF flows, although nominal for ETH, nonetheless, still a positive flow day, which is important. I mean, the fact that Grayscale didn't sell any yesterday is is a big deal. What did they do on the Bitcoin side? Did they sell anything on Bitcoin side? Of course they did. But and I don't know if you noticed, but Grayscale now has a Bitcoin mini with that 0.15% fee too, trying to replicate what they're doing on the ETH side to stem some of the outflows. Right? They lost so much money in outflows from this that they're trying to keep it. They're trying to keep it in the house, and so they launched another product to try and attract people that were leaving this because of fees to stay under Grayscale's management. So, nonetheless, this to me is also positive for the outlook of Bitcoin. So, I'm not yet ready to commit to things being done. Economic numbers again today, and Mark, please chime in at any point on this, because I'm just kind of riffing off of stuff that I've been watching this past week and stuff that came in today. Mixed numbers on economic data, cooler than expected on PPI and core PPI, which is the producer price index. So that means it's costing less for manufacturers to produce things. However, if we do PPI X food, energy, and trade, those numbers came in hotter. So that's a mixed bag for me. I'm no economist, but Redbook year over year, Redbook is revenue on same store sales, 9,000 stores across the U.S. So year over year, 9,000 of these same stores have 4% have a little less revenue generated this year than they have a year ago, right? 4.7 down from 5.1. So that speaks to the cooling of the economy, which of course speaks to the Fed cutting rates in September. Whether you interpret that as bad news equals bad news or good news equals good news, up to you. It's a coin flip on those on how those metrics are interpreted every week. But we have more coming this week that might help provide some clarity. Core inflation data coming in tomorrow, CPI as well, and then of course we go back to jobless claims on Thursday. So it's a moving target. And it gets so difficult to trade this stuff when we have so many things influencing the price action.
That's what I was going to ask you. Yeah, keep going, and then I have a question for you.
I just think it's important to identify the areas that you're comfortable with and stick to that plan. Because if you are accumulating for a long-term investment, and you dollar cost average your way in and you dollar cost average your way out, you're probably going to be fine in the long run, depending on what your time horizon is. If you need this money to pay rent at the end of the month, I'd sell the rip and hold on to your money because, because you're gambling, because on any given day, we know that price can swing 10, 12%. It can happen. So at the
Yeah.
moment, you see a little bit of of an uptick. I'm encouraged by the fact that purple whales have been buying despite all the sell pressure that's coming from the other order classes. I am thinking that we could stay in this range for an extended period of time, and people, as you know, get impatient with that, and that's where opportunities come from. So, we still have just a huge amount of liquidity up here above 70K, which, I don't think we get a legit shot at until we start to see more stacking here. Now, it's good to see this buy wall here at 55, building to about 34 million in this time frame. But it's also worth noting that this moved down from 56.5 like over the weekend, and so, or last week, something like that. So right now the biggest concentrations, it was 50K until just recently, right? So in the past 24 hours, it looks like we've had more move into this 55K level. So that's good to see, and maybe that helps keep us up here and push towards this range. There's a ton of shorts up here around 60, like between 64 and 66K. And I just think that's a magnet for a liquidation event. We just need the catalyst to push us up there, and slowly starting to see some liquidity come into this range here that may help us, right? You can see it moving right as we speak here. So you see a little block here of about 13 million just moved into place, and maybe that helps us push up and erode to this. This is a big, it's 28.5 million here on the spot order book on Binance, but it's a hell of a lot more than that in terms of liquidations for leveraged traders. And as I have said, since we've interacted with the 69K level, that is the most important part of the chart that we need to RS flip with full candle bodies above it before we have a chance at a sustainable move, in my opinion, past this 70K and into all-time high territory.
If we're looking at a potential liquidation, where can you go to look and see where everyone's positions are to see how significant that liquidation can
Well,
be?
I have been talking with the guys at Kingfisher. You see a lot of their charts, their liquidation maps on socials, and we're actually working on a little partnership with those guys.
Okay.
So I could share that chart and show you what it looks like. These guys, man, they have a heap of data, and I really think that they are probably the best at what they do.
Now I know
Really,
you use Binance
we
charts
use
and stuff,
Binance.
right?
We use Binance data.
Where are they pulling their data from?
They're pulling from a
You
few
know?
different. They're pulling from several exchanges actually.
Yeah.
Let's see.
Mark, do you ever look at this stuff on chain to see the different positions and things of that sort? So if there is a liquidation event like Keith is speaking about, you kind of have an idea of how deep that might go, or no?
No, not really. Usually, it's reported to me like after the fact. There are people that are paying much closer attention to this stuff than I am. But
Yeah.
on chain, on chain stuff is a bespoke market. Really, it's much more reliable to pay attention to these things in terms of macro market trends on centralized exchanges like Binance and Coinbase.
Got
And
you.
so this has actually changed a little bit. I was looking at these clusters here previously. Let me shrink this up because it's good. Look at what's way up here in the 100 grand range, right? That's obviously like people trading futures, but we actually have quite a bit here at 60K up to this So since I looked at this yesterday, it looks like some of this, some of these shorts may have closed, but we still have quite a bit up to what's this? That's 64.8, and I would say the low hanging fruit comes all the way to 66K. You know, this is certainly within reach right here, right? That goes to 61.5. And if we look at where bids are at the moment and asks are, that this cluster right here is easy to penetrate. There's still a pretty hard ceiling here at 65K.
Yeah.
So I would say if you're
Okay.
interested in that, head over to the guys at Kingfisher and check out what they've got to offer.
Keith, will you put that in the comments?
Sure.
Do you mind? I didn't catch if it was just kingfisher.com or what
It's
it actually was, and I don't want to
kingfisher.io.
mislead anybody. Thank you. Mark, what about yourself? Was there anything interesting that you've been noticing or that you wanted to kind of direct us and our attention towards?
Hang
Yeah,
on.
sure.
What
Just
is
real
Keith
quick
laughing at? Hold on.
before Mark chimes in, I see him getting called out for August 2012.
I was going to circle
BTC was
back
more
to
than
this.
200
Yeah.
days old. Let me go clarify. In terms of the chart, and Bitstamp is the oldest one I know of. The first 200-day moving average came in April 2012. Oh, my bad. I caught it by I missed it by a couple months. So there was a 200-day moving average in April, not August. So there you go. There's
You
my
just unleashed
clarification.
you unleashed more trolls.
Please troll the hell out of me for that.
I love your sense of humor. You're just going to welcome it and laugh at yourself and be like, okay, fine.
Right. So, whatever the
Our
case.
friend doesn't have a name here in the comments, but
Right.
thank you for
Exactly.
commenting
What's that
or
tell you?
attending the call. Okay, well, thank you for clarifying, Keith.
So I'm the fool for that. Now, Mark, now that I've made a fool of myself, what do you think of all of this? What's your what's your take? What's your perspective?
Yeah, well, let me pull up the chart a little bit. So I agree mostly with everything that you said. So the fact that I think that the economic data is coming in a mixed bag. There's nothing there that inspires too much enthusiasm, but nothing to be overly, panic stricken about either. And I think that breeds uncertainty, and in a way, that's the thing that everyone should be nervous about. Markets are very predictable when they're moving with conviction, and when there's nothing to have any conviction about, this is when sort of weird things start to happen. In terms of news and things, there was I actually just reposted from my Twitter a tweet that Jen shared with me just before the call.
It was from last week.
It's from last week.
Is that the one?
Yeah, exactly. Which is that prior to the halving, based on Bitcoin's blockchain analysis, about nearly 100% of addresses were in profit. And after the halving, 80% are in profit, which is interesting for a couple of reasons. One is that it means 20% of the addresses that are included in that data set, bought at prices higher than this one. And this is speaking to the stuff that I was saying, I think pretty consistently over the last months and years, which is it's better to buy things when they're cheap and sell them when they're expensive. And when things are at the end of a rally, that's generally the worst time to buy something. So apparently 1/5 of the addresses in that data set have bought between 60,000 and 70,000, which is a surprising statistic. But it's also not all that comforting, because it still means that despite the drawdowns that we see today, 80% of the blockchain addresses are in profit. And this is one of the reasons why I don't like to I don't like to buy into the Bitcoin markets with too much volume, is because there are so many with an advantage that I will never get. similar to gold. Unless you were born in the 1970s, it's very difficult to get a leg up on the gold markets. And real estate in Australia, unless you were fully employed in the 1960s, it really doesn't make sense to invest in real estate. And so, yeah, the fact that 80% of the addresses are still in profit is a pretty frightening statistic, in my opinion. Generally, when we've seen, when we started to see bounce backs, so when we started to see the number of people underwater get to a level where it actually makes sense to start buying back into that is generally around sort of the 2/3 margin. So 80% I don't think is too far down. I think that there's still a little way to go. And I maintain my conviction from the last call. But I did want to point out that one of the patterns that we were looking at was this descending broadening wedge, which a few weeks ago you could kind of see it forming. This is again on the weekly chart, but I'd say now with the wick down, we can kind of draw this with some level of conviction. But it's interesting. So these descending broadening wedges during an uptrend actually is a bullish continuation pattern. So it does suggest that if we're calling this the bull run, with capital letters, proper noun, then it does suggest that there is room to the upside, and all of those people that are calling for a post 100K Bitcoin should take solace in the fact that at least the chart pattern is agreeing with you. But I do think that we're headed for further downside before we get to that level. And I've said before that my target is around sort of the 35K region, just because every time we've had a death cross on the MACD, that it's generally at least on the weekly time frame, that it's generally resulted in a 50% drawdown. And I'm also looking at the on the weekly time frame that there could be another death cross coming up if the price continues down this way. That one might be a little bit more catastrophic, although it's not unheard of for Bitcoin to death cross from the fast moving averages into the slower moving averages and then pick up again. So I wouldn't be too concerned, right? So if these 20 EMAs or SMAs cross beneath the 50 or 51 on the weekly chart, just know that it's not as as important an indicator as you might expect, just because these things tend to play hopscotch with each other quite a bit. So just know that if these come down to touch this this lower support line, I think that would be healthy and normal. But a couple of other things to point out here. One is that if we go out onto the monthly chart, which is something that we rarely look at, and I think people should probably pay more attention to it. You can see that we are actually getting the MACD curving down as well for the first time. So up until recently, this was still trending higher and higher, but now the the fast moving average is completely flat and looks like it's going to be curving back down. And when it crosses beneath, just historically, that has also signaled about a 50% drawdown. So we've seen that back here in 2018. We've seen that during the COVID crash. We've seen that during the end of the last bull market, and we might be seeing it again here. So it doesn't mean the end of the bull market. It's only meant that once. Whereas every other time it was kind of more, at the, obviously this part here, but certainly the COVID crash wasn't a bear market. This was just, the price playing out the way it was playing out. Black swan, yeah. Well, yeah, but it's only a black swan once, right? That's the point. So now we might.
I thought we were just talking about COVID, right?
Yeah, but yeah, the point is that this was also kind of a broadening, descending, a descending broadening wedge type pattern, depending on how you draw it. Not as obvious as the one is today, but that was also kind of in the middle of a bull run. We'd rallied up into it, and then we had it, and then we rallied out of it. This is a much longer period rallying into it, but we might get a similar pattern before breaking out. And then the last thing I wanted to show you about the Bitcoin charts is that the Heikin-Ashi candles, which is something that people rarely look at, but is a really good way to sort of just get a visual indication of what's happening in a trend. And these don't mean what you might think. So you can't necessarily measure price directly from these candles. They measure a distribution, kind of like a probability distribution. but whatever. The point is that there's a statistical model that's applied to each candle, and the wicks are a function of that, and so on. But generally, what you're looking for in a strong uptrend is like nice tall candle bodies with wicks pointing up. And when a strong downtrend, it's the opposite. You want tall candle bodies with wicks pointing down. And you enter sort of these choppy zones, but you can see that clearly, the uptrend is weak here. Like it's very, very weak. The same way that we saw the trend get weak over here and at the top of the that first peak of the last bull market, at least on the monthly chart. And if we zoom out to the weekly chart, you can see something something similar. Like it does have the hallmarks of this pre-COVID part of Bitcoin's history. So yeah, just something to be aware of. Like I do think that all indicators are pointing towards further downside for Bitcoin, maybe even relative to Ethereum, by the way. So this is the channel that we've been paying attention to since way back. Remember, back in May, I said that it looks like Ethereum might eventually touch the top of this channel again, and we weren't sure what was going to happen out of that. I speculated that it might continue higher, or it could turn around and come back down. We now know that after it blew up in 1 week to the top of that channel, it then sort of stayed here in a downtrend for a little while and has now come back down. But you can see that Ethereum's actually recovering now since revisiting the bottom of this channel. And so, as the Ethereum price improves, yes.
Wait. I don't see your ETH chart. Keith, is it just
Oh,
me,
you
or
don't?
do you still see the BTC USD
Oh,
chart?
my mistake. Let me.
I was listening along and realized like I should be actually getting this visual also.
Yeah,
Sorry.
yeah. Sorry, let me get that. Yeah, can you see it now?
Yes.
Okay, so yeah, just quick
Oh,
recap.
so there you're talking about how it reached the top of that channel there.
Yeah. So we blew up to the top of this channel like the week after I suggested that it might do that. But then I was wrong because I thought that the ETH price would continue up, and instead it stayed in this channel and went back down again. But if it's going to continue respecting this pattern, then we're expecting ETH to probably revisit the top of this channel again. And when ETH is doing that, the Bitcoin price is going down. So yeah, the fact that ETH has touched the bottom of this channel and is now rallying up again does suggest that there might be some weakness in the BTC USD pair. But we will see. That it's not impossible for ETH to completely break out of this thing and turn full bear. It's been disappointing, I think, for a lot of people in the Ethereum trading circles to see the ETF do literally nothing for the Ethereum price. Certainly,
it took a minute for BTC though, right?
I mean, not this long.
Yeah, Bitcoin
Did
had
anything even happen? Go ahead.
Bitcoin had 2 weeks. 2 weeks of dump before it recovered once the ETF was launched. And I think
it recovered, but did it do anything? Was it any sort of a catalyst?
Well, we'll see.
Or
I
any
think
sort of positive price action in the terms that you're talking about it with Ethereum?
I think even looking back on it, like even people in the Bitcoin trading circles, I think, are relatively disappointed with how the ETFs
in
narrative
general
have played out for it, which again is something that I don't think any of us on the call is necessarily surprised with, but there were people that were absolutely 100% convinced that
this is going to send it to the moon. Yeah,
exactly. That the ETF activity is going to be the thing that takes Bitcoin to 100,000, if not $1 million. That was not uncommon speculation. And the fact that it's barely taken it back to Bitcoin's previous all-time high, I think, is pretty disappointing for a lot of people. So and in a way, I feel like that kind of took the wind out of the ETF sales for for anything else that's going to get an ETF, Ethereum included. So if Bitcoin overpromised and underdelivered on ETF stuff, then it's already shaken everyone's confidence, and so the ETF sequel is not selling as well as the its predecessor did. At least that's my interpretation of it. And also, the market's in a different place now. The election's getting closer. The market climate is a little bit more hostile. We're seeing volatility pick up. Tensions in the Middle East are getting worse. It's it's a different time. Not to mention that December is generally a bullish month, and we're now heading into August, September, which are generally speaking much less optimistic. So it could be that we won't see anything improve for Ethereum until November, but who knows? Like I said, we're at the bottom of the channel now. Let's see what happens.
Wasn't September one of the months that historically just does not do well?
September's one of the
April, May, and September, something like that. I remember you guys saying.
September's one of the worst. May and September are generally pretty bad.
May and September.
And November,
Yeah.
This year, May through September has been pretty shitty.
Yeah. Generally, things are starting to improve in October, and then November and December are two of the best months of the year for price action.
Okay.
But yeah.
What about elections? Really fast. Sorry, Mark. Oh, you know what? I'll come back to it. Go ahead. Keep saying what you're saying. You didn't have to stop sharing.
I know. But I was done with that screen. I think I'll share a different one.
While you do that, you mentioned elections.
Sure.
No, go ahead. You're ready to share. I'll wait my turn.
Yeah, so I thought it might be fun to look at Bitcoin's cousin, which is I can't remember the actual. So the ticker is all capitals Bitcoin. But it's an ERC20 token, Harry Potter, Obama, Sonic 10 Inu. And what's interesting? Yeah, I know.
Welcome to DeFi, Keith.
Welcome to DeFi, exactly. And yeah, what's interesting about this token is that it actually has a pretty attractive volatility versus the US dollar. And so I thought that what we might do is have a look at how trading some of these other economies can actually be really worth your while. And so what I thought might be fun is to have a look at if you had been trading this thing since August 14 of last year, about a year, and just set your price ranges this way. But just appreciate how volatile this thing is. This is about a 4x increase up and down.
Mark, for anybody who doesn't know, because I don't think the last few calls you've shown us the carbon DeFi gap, right?
Sure.
So for anybody who doesn't know, this is carbon DeFi. Right? What you're showcasing right now is the simulator. This is a back testing tool. It pulls real historic data to back test up to 365 days, any combination of standard ERC20 tokens you choose to pair, right? You're setting a buy range and a sell range to create a recurring strategy where it will buy low, rotate, sell high. So go ahead. Just for anybody who's new to the call, who doesn't have this context, now you can continue, Mark. Sorry.
Yeah, sure. So let's say that you started with like $100 of USDC, and you were trying to trade this specific meme token on Ethereum. The coin started at about the same price it is today, at about 10 cents. And it's been as low as about 3 cents, and it's been as high as about 25 cents, which is a really cataclysmic volatility profile, which is, if you are trading this way, is exactly the kind of opportunity that you're looking for. So you don't need to have an opinion about the validity of these kinds of tokens, just to recognize that it's traded with volume, and that there is significant scalping opportunity here to take advantage of. And so what we're going to look at is just linking together two very simple limit orders. So let's say that you decided to buy every time it got to 8 cents or 8.7 cents, and then decided to sell every time it went to 16.3 cents. Over the last year, how might that have advantaged you? And we're just going to wait for the simulation to crunch some numbers here.
Now,
but that's a pretty significant increase, considering that the token has only been able to to move between about a 60% down and about a 60% up. But yeah, the point is that just trading that channel has been an extremely profitable exercise. This is like a 554% gain measured in US dollars.
Over what period of time?
This is over a year.
That's pretty good.
Yeah, it's not too bad. And that's That's with the and you know, and that's not really like at the end of that simulation, we haven't actually taken any exposure to Bitcoin, or we ended our positions. We
USDC.
started, yeah, we basically started longing the token at 8 cents, and we go short every time it gets to 16 cents
So
over and
you
over and over again.
provided 100 USDC. At the end of the year, you wound up with 554.95, something like that, in USDC as well.
Yeah, exactly. So we had,
Yeah.
we like I said, we'd finished selling all of our positions, you know, effectively going short by the time the simulation ends. And so yeah, and then the other thing I wanted to bring attention to was this fact that, you know, usually trading pure limit orders that way is not the way traders like to think, because it requires you to have a relatively strong conviction in those price targets. Whereas people will generally draw these like rectangles and say that there's, you know, there's a probability that we're going to get to the bottom of this rectangle, and the further up we move through that range, the less confident we are in that price. And so setting a range like this, so for example, selling between 16 and 18 cents and buying you know, between you know, 9 cents and 7 cents, for example, is a pretty rational thing for traders to do. And so we can look at that as well. Let's say that we bought our Bitcoin at launch, and we're going to start with, you know, 1, 2, 3, 4, 5 of these. And let's say that we start with 0 USDC when we set up this strategy. And so in this case, again, we're trading over the course of that year, but now using this fading approach. And now our ROI is actually improved to 813%. So, you know, the point is that there are very strong opportunities to trading some of these markets if you know how to approach it. And the value here is that you don't need to guess. You know, like I'm certain that you could get a lot of these price charts yourself, and you know, calculate the, you know, woulda, coulda, shoulda if you wanted to. But here we've got a resource that allows you to do that. And more importantly, it represents exactly what the product does. So if you want to trade these kinds of volatile tokens, you know, there is a product set up deliberately for that specific use case.
And one of the coolest things, I think that you guys have with this is that we certainly don't have, us centralized exchange traders certainly don't have. Um, and as far as I understand, a lot of DeFi platforms may not necessarily have what you have, and that's the ability to really mix and match pairs um, uh, with
Right.
much more ease than you can, you know, instead of having to, you know, bridge from DeFi platform to protocol. Doesn't that kind of work seamlessly here
Yeah,
with this?
absolutely. So we can choose a different, you know, we can choose any numeraire or any, you know, we can denominate the trading pair however we like. So for example, this is the price of, you know, this Bitcoin token in terms of this other meme token that a friend of mine is involved with. And you can see here we're getting a dramatically different, you know, a dramatically different trading profile. And in fact, the volatility is not nearly as attractive, you know, just because these are very strongly correlated assets. And so in a case like this one, what you might do instead is to create what we call a concentrated liquidity range, which means that your bids and your asks basically chase each other in a much more profound way. This is very common. You know, this is a very common type of trading position in DeFi. It's typically called liquidity provisioning, where you choose price bounds through which you would like to support a certain market, and then you know, kind of let it work for you. The difference here is that we can set arbitrary price boundaries, whereas most concentrated liquidity protocols will only let you choose from like a subset of predefined what are called tick boundaries. And also, most liquidity protocols will only let you choose a specific what's called a fee tier, where the fee is actually just the way of measuring like the bid ask spread. And so what's very usual is to have like a 1 basis point, 5 basis point, 10 basis point, 30 basis point, and so on. Whereas here we can set it to wherever we want. So like 2%, for example, might be something reasonable to suggest. And so here we can do this simulation as well. And what you'll see is that rather than it, each one of our bidding and asking positions being filled, disparately from each other, we're now looking at, trading the position, trading the positions into each other continuously. So the green and the red pieces kind of fit together. Now, the interesting thing here is that the concentrated position isn't performing nearly as well as the other positions that we're creating before, but this was just a specific example. We can try to simulate the position somewhere else and see how that would have performed and so on and so forth. The reason this thing
That's what's
is
really nice about the simulator.
yeah, exactly. But yeah, so
you
we
kind of
can
know
still
what you're
generate.
getting into. God, sorry.
Yeah. The point of it is so that you can get your sea legs under you when it comes to navigating these specific pairs, so that you don't need to jump into something without understanding exactly what you're doing.
Mark, really quickly, for anybody watching the call, whether it's live, the recording, I did share carbondefi.xyz in the comments, along with material indicators as well. These are the indicators in the fire charts that Keith was sharing earlier. So definitely, along with everybody's handles on Twitter or X, so definitely give them a follow and check out the sites and the tools as well.
Hey,
I
thanks
just
for
wanted to
doing
make
that.
sure that everybody knew. Yeah, of course. This is there. It's great to show what you guys are able to do, but it's really nice for them to know that this is something that they can do too, right? So here are the sources.
Hey, for some reason it won't let me add to the chat, but if you want that Kingfisher
Why?
URL, because I'm sharing on X, and I guess Elon won't let me share these comments in a live chat. I don't know, but it's
Weird.
It's kingfisher.io.
Okay. Mark, I didn't mean to cut you off. Okay, I added that there as well. We're getting to the top of the hour, so let's say, oh, okay, you created one now, actually in the positives, right?
Yeah. I mean, you should see that one
nice
here at 5%.
Yeah.
That's
that's
trading Bitcoin. Well, that's trading whatever that alleged Bitcoin is.
Exactly.
Against
just two meme coins,
SPX.
right?
Yeah, exactly. Against and this isn't XPX 500. This is SPX 6900. So these are two cultural, culturally significant ERC20 tokens that are developed with let's say a sense of humor.
Is there a Russell 420?
We'll find out. if there isn't already,
I bet there's going to be one after this call.
Well, you know what there
Carbon
is.
DeFi was deployed on 420, Keith.
There is a Harry Potter Trump Homer Simpson. Yeah, called Ethereum. Oh, just that the counterpart to the all capitals Bitcoin is the all capitals Ethereum. And these things as well.
Well, our industry definitely has humor. We have a sense of humor.
Yeah, exactly.
Yes.
Okay, Mark, we are at the top of the hour now. I want to, somebody just did kingfish.io. This is,
Kingfisher.
I'm going to show this here. Fisher. Sorry, everybody, my mistake.
You had it right.
No, I did.
Yeah, you posted kingfisher.io.
Right.
Somebody else put kingfish.
Oh, okay. Okay, well, I apologized anyway. Kingfisher.io. Okay, awesome. Mark, I did just tell everybody, just because we are using the simulator right now, this is available on desktop on the Ethereum deployment, right? You have a couple active deployments on some different chains, but the simulator is on desktop through Ethereum, right?
Yes, indeed.
Cool. All right. Any last thoughts, you guys, that you want to share? Oh, I did have one question. I want to leave it on this really well. I mean, we could just leave it at this because we're out of time. We mentioned the elections in November. We said that historically November, December generally get better, right? September, August, September, or August, September, not so great. Then it starts to get a little bit better. What about election years? Do you guys know offhand? November might be a better time in general, but is it also during like an election year? Do you guys know offhand?
I personally haven't looked at the data relative to
No?
elections, but safe to say that I do know that historically we start to see things building October, November, into the end of the year.
Yeah.
In terms of the election, I think that we're going to see potentially some, whatever happens prior to the election as we get super close, then I think we'll probably see some chopping until there's
Yeah.
some clarity. But who knows? Every day,
Yeah.
every day, every day in this in this election cycle brings a new, fun, and exciting story.
I feel like the new and exciting stories are coming from
It's
all angles
it's
right
it's like
now.
Pee Wee's Big Adventure.
All right. Well, you guys are awesome. Thank you so much for joining me. We'll see you next Tuesday, same time, 4 p.m. UTC. Thank you to all of the viewers, live and recorded. Any questions, anything of the sort, you can always reach out to me, post them in the comments, and we can always address them next week. Thank you, guys.
Thank you.
Thank you,
Have a
Keith.
great rest of the week, guys.
We'll
Trade
see
safe.
you next week. You also. Thank you.